This is FinTech Talk. I'm your host, Charles Orton-Jones. Today, we're looking at broker research. We're looking at how investment professionals really use this research and also how technology can multiply the impact that research has. It's an esoteric area I personally don't know a lot about, but to help me figure it out, we've got two of the world's leading experts. Aaron Daniel is the head of equity strategies and a portfolio manager at American Century Investment. His company manages $200 billion approximately in assets. Aaron, wonderful to have you here.
Thank you, Charles.
Thank you.
Looking forward to it.
And we have Scott Rosen. Scott is the founder of Visible Alpha, which is one of the world's most trusted platforms for hosting broker research and analysts' models. It's just an invaluable tool for investment professionals, widely known throughout the industry. It's now owned by S&P Global. Scott, great to have you with us.
Nice to be here.
Cracking. Well, Aaron, perhaps you could just give us an idea how you use broker research at American Century Investments.
Great place to start. Thanks again, Charles, for this opportunity. When I think of broker research, I've been in this business for over 20 years, and we've changed the use of broker research over time. It's really transformed. Gone are the days when you are waiting for a call from a large broker to make a decision on a stock. Today, we have technology platforms that has moved leaps and bounds, especially over the last 5 years. And more recently, with the use of AI, we have tremendous amount of information that's available to us at fingertips that we can take advantage of. But also with that comes the challenge, because clearly we have information overload. So you really have to be very careful and also focused on how you prioritize broker research and who you are using, where do you leverage the information, what platforms do you use, on how do you adapt to the changing world of information in the broker research area.
That's great. And Scott, you're on mute at the moment, by the way, if you just unmute. Yep. Perhaps you give us an insight into the variety of ways in which investment professionals use broker research. And I'm guessing there's no one standard model. You know, not an expert myself, I'm assuming get research, they read it, but there's just so much more to it than that, isn't there? There's kind of analyst models, there's confirmation of the working and the thinking behind it, there's importing supplementary data. Just give us an idea of all the different ways in which people work.
Yeah, I mean, I think it maybe makes sense to take a step back and sort of think, why is it that clients rely or investors rely on broker research in the first place? I mean, it's sort of, I'm not going to go into the whole history, but it goes back to the days of fixed commissions, when brokers had to differentiate themselves, and they did it through creating research, and it created this kind of unusual circumstance, because there's not very many industries where you find this, where you have basically a resource being provided by one side of the market to the other side, which is in many ways not explicitly paid for. It's implicitly paid for in many ways. And there's been a whole bunch of different things, which I'm happy to go into, but I'd rather not, in how research gets paid for, and different challenges around that. But it means we have an unusual situation where we have a whole side of the industry, the sell side, is producing content, researching companies, talking to management, producing, as you said, research reports and models, and spending their time servicing the buy side, the investors, without it being sort of a paid for service. It is paid for, and there's mechanisms by which it happens through commissions and other things. But it's a very unusual situation, and it's not a sort of, I'm going to pay you $1 for $1 worth of service. It's a very unusual market. And it's really created an environment where the buy side, the investors, have to some extent, I wouldn't say outsourced, but they've over the past many years begun to rely on the sell side to provide a lot of the base information that they need to do their job. A lot of the information that is very difficult for any one investor to spend the time and energy to do, they rely on the sell side to get the sort of economies of scale that individual investors would find very hard to do. Other than sort of very large institutions, it's very hard to have kind of the breadth of coverage that you could have to analyze all the potential investments that are out there. And so the investment community has basically relied on the sell side to do that. And so sell side analysts are filling lots of different gaps where they see them, where they feel that they can provide service, whether that's providing individual stock coverage, whether it's strategy analysis, whether it's economic analysis. There's lots of different areas where the sell side has developed competencies and spend resources to become sort of experts, right, in these areas to provide counsel, provide analysis, provide the collection of information to service investors in all sorts of different areas. And it's something that I think the sell side has come to rely on, quite heavily. With I think important an understanding that the buy side, the investors, still ultimately are making the investment decision. They're ultimately trying to figure out how do they differentiate themselves. How do they come up with ultimately the investment thesis that they want to pursue, but against a backdrop of information that they're getting from the sell side.
Okay, great. Yeah, Aaron, I'm just wondering, you're kind of inundated with offers of research. How do you assess whose research you value and who has proved to be perceptive and who is, less trustworthy? What mechanisms do you have for assessing the different research you're getting?
Yes, Charles, you're absolutely correct on that. The challenge we sitting on the buy side constantly have is we have limited amount of time and we have tremendous amount of information being thrown at us. Just to give you an example, if you take a typical earnings season during a week, you're getting more than 3,000 data points within a short period of time when companies report on a weekly basis. So you're constantly having to prioritize what you should be focused on and where you should be spending your time to make the investment decisions that you have to make. And as a result, you're applying constantly the 80-20 rule, if I can call it that. Usually the 80% of the information comes from the top 20% of your research analysts or brokers. And the way you do that is really you have to have an intelligent assessment of who the top research people are at each sector level for each stocks, and really have an understanding of, okay, when it comes to technology, if it is NVIDIA, for example, I'm going to go to a certain analyst and I know I can get reliable information and pull that data from them. If it is Apple, it should be someone else. So you have to concentrate and focus on your top 20%, if you will, of the research providers. And then you rely on platforms such as Scott's platform to really get a better understanding of how we can leverage that information to produce intelligent investment decisions, if that makes sense.
But just to push you on that, how do you identify the top 20%? And when you're looking at historical record, are you talking about the 20% that accords with your needs, that it fits in, they're supplying the kind of information you're looking for? So if you've got, I don't know, if you're an ESG particular focused department, you're going to look at broker research that focuses on ESG. But how are you ranking the successful from the unsuccessful?
Yes, I mean, that's a great question because we apply a very quantitative model across all the brokers and across all the research that we get from the brokers. For example, at American Century, we have close to 100 brokers that are supplying research to us. From our perspective, we literally force rank them on all the research that they provide to us, and we track their track record in terms of the delivery of research and what is the data that are providing to us. It is useful to us. Can we leverage this for investment decisions? And then at the end of each quarter, we create a ranking of all the brokers that have provided research to us based on their output, and then that is how they get paid. based on the research that they provide to us. So that is really, so we have a quantitative process that we use on a regular basis, because otherwise, you really can't objectively assess are they giving you the right information, and more importantly, is that information helping you to make the investment decisions that you need to make.
It's invaluable. And Scott, let's just introduce the theme of technology here, because there may be an assumption of some of our viewers that, okay, investment professionals receive reports, used to be PDFs and stuff like that, piles of stuff or printed out documents. But of course, that's not really the case anymore, is it? Just tell us about the role technology can play, particularly in managing all the different areas of research, but also creating analyst models and analyzing them and changing variables. What can be done with technology to make the broker research more interactive?
Yeah, well, I mean, the industry has changed a lot. I mean, back in the day, back when Arena started, it literally was stacks and stacks of research reports. It was, you would go into a portfolio manager or analyst office, and there would be floor to ceiling stacks of research reports. And then the PDF file, as you said, came along. And there are delivery platforms such as Visible Alpha and others that will provide you the ability to search through that. I would say that the primary mechanism by which investors receive research is still email, believe it or not. It's still the main way that people are getting research reports. But once they know what they're looking for, then they tend to go to a service. When they're looking for something specific, or they're trying to do some background analysis, or they're trying to get deeper into a topic. Visible Alpha in particular, we take all the analyst models, as opposed to, we have research reports as well, but we focus on the analyst models. Because the analysts, when they're looking at a company and they're talking to management and they're, checking suppliers and doing all that, at the end of the day, they take all their ideas of the company and they quantify it. And they say, okay, how many units is the company going to sell? And what's the pricing going to be? And what's the costing going to be? And they build, very detailed spreadsheets, as you would in any, they build these very, very detailed spreadsheets, which can look like anything. When I was an analyst many, many years ago, I never gave those spreadsheets to anyone. They were my secret sauce. They were ugly, and I never wanted anyone to see them. But I would use them to concentrate my thoughts and to do scenario analysis and to do evaluation. And I might take a table out of it to put into my research report, but I would never give it out. That has changed, and for a variety of reasons, which we can discuss. But now clients want those. They say the research report is great, talking on the phone is great, but I really want to see the numbers, because I want to compare what you're saying to what others are saying, what our view in-house is on those individual assumptions that make up your larger view of a company. Because the investment controversy in a company, no one says, well, we think this company's going to grow 20%. They think it's going to grow 40%. Okay, fine. Why? Because this product is going to be successful, or that campaign is going to do well, or they're going to do well in this market, or their cost-cutting exercise is going to be successful, or whatever it might be. It comes down to individual investment controversies on a company, which can be ultimately brought down to numbers. And so people want to understand what your numbers are on those topics. And so what Visible Alpha focuses on, getting those numbers and putting them into a place where people can actually see them sort of lined up, broker against broker, for people entitled to see it, and the consensus, so everybody knows kind of what the market is on those. So that's kind of what Visible Alpha does. But as an investor, you want all that. You want to see the research. You want to ultimately, the real value from an analyst relationship is picking up the phone and talking to them and finding out what do they actually believe. Right? It's great to get the numbers. It's great to get all this. It's great background information. It helps you in your own modeling. But the biggest value, I think, or I suspect you'll agree, is actually picking up the phone and talking to the analysts, understanding what they're really thinking about a business, because that's what you're really paying for in their insight about companies.
Yes, I agree with what Scott's saying. I think a lot of the people sometimes tend to focus on the analyst ratings, and the analyst ratings, for us, for all practical purposes, is somewhat meaningless. What we want to focus on is actually the data that's behind the ratings, to see, where is the conviction for that particular rating is coming from. I can't tell you how many analysts that I've spoken to that may have a buy rating on a stock, but then when you talk to them, you end up with a sell rating actually, but they haven't just communicated that to people, because if you're just reading the information, you think, okay, this guy has a buy on stock. But when you talk to him, like Scott said, at the end of the day, you have to still pick up the phone and talk to these people, that you come away with a very different conviction than what they actually have put out on a piece of document. And another point that I would mention is this is really, I think, an area where the technology platform can make a big difference in terms of being able to provide the information in a very short period of time. Because as I pointed out earlier, we have time constraints. In a very short period of time, we have to make decisions on portfolios. I have 7 strategies that I'm managing with over 400 stocks. I just don't have the luxury of time to spend a lot of time on a single name, other than how much I need to really actually spend my time on. So the challenge that the sell side has, and with most of the research, is they have trouble integrating the market sentiment and the market and the investor sentiment. They may come out with a lot of information, but the information is useless if you don't gauge the investor sentiment and what the actual investor is looking for. Because that is where sometimes there is a mispricing in the market happening, because the buy side expectations are very different from that of a sell side expectations. So you often see stocks that actually beat the numbers and can actually go down. On the other side, the stocks actually miss the numbers and can go up. The reason that happens is because there is there's a disconnect going on between the buy side and the sell side expectations. And you see that often in the marketplace. And that's really where you can take advantage of good research and leverage that to make investment decisions.
Wow. Yeah, Scott, what do you make of that? That someone can provide research saying buy, talk to them, they say sell. I mean, that's not engendering confidence, is it? Or is it? Because life is complicated, and maybe reducing things to ratings and simple signals is absurd because companies are so complicated.
Well, I don't want to speak to people being quite so different in their kind of ranking to their kind of personal views, but I think what Arun's kind of pointing to, though, is also what an analyst might be thinking and where they might be pointing might not be what an investor is thinking and where they might be headed, right? So I might be saying, you know what, I love this stock because this stock epitomizes this trend, and I think this trend is going to the moon, and this stock is, right on point. And you might think that trend is so stupid, it's not going anywhere. And so you talk to me after hearing the reason I'm saying this is such a great thing is because I have something that you disagree with, right? And that's where the interplay, I think, becomes really important. At the end of the day, the investor has to have their own view, right? No one wants anyone who's picking stocks based on other people's recommendations. That's why we're hiring you. If we wanted that, we'd hire that person to be our money manager, right? So the investor needs to have their own view. That view is informed by the research and many other things, right? And so I think the key is not that the recommendation or whatever is a misrepresentation of the view. It's that there's much more nuance than what you're going to see in a buy, sell, hold recommendation. And I would suggest that although those recommendations get a lot of play, professional investors generally see them more as a signal, particularly when they move, that analysts are becoming more optimistic and more pessimistic on a name. And that's something that's far more interesting. Why all of a sudden have you gone from a buy to a strong buy or from a hold to a sell? What is it that's changed? What is the catalyst which has caused you to change your view on this stock? Or what is your interpretation of that catalyst, which is different from others, which has caused you to do that? Now, some of that might be in the research report, and it might be in the numbers, and that's fine. And I'm not saying you have to pick up the phone and talk to everyone that you ever read a research report on. I'm just saying that's where the kind of typically the maximum value is had. That said, there's a huge amount of value to crystallizing from the research, from the analyst views, down to numbers. To be able to not have to talk to every single analyst who covers a name. Talk to the people who have something interesting to say. But for the rest, what's going on? This analyst is, this is where the market believes this product is likely to go. This is where NVIDIA is likely to, how this cost structure is likely to change. This is where the market is. This is kind of the spread. Here's where the analysts I trust are in that sort of overall kind of market sort of expectation. I want to talk to someone here. I want to talk to someone here. I want to know, why are you more optimistic than most, or why are you more pessimistic than most?
Yeah.
What's really going on, so that I ultimately can make my own determination. Now, it might be I agree with the market, in which case, maybe I play the momentum game, maybe I don't. Or more interestingly, I disagree with the market, and then I have an investment opportunity, right?
That's great. Aaron, to what degree, therefore, is your job still a matter of instinct and being ahead of the numbers? I mean, we're going to talk about AI in a minute and its role in the technology used by investment professionals. But AI also strikes me as an industry where investors have no previous guide. The emergence of OpenAI took was it 18 months to go from no one ever heard of it to a sort of $10 billion valuation to I don't know what it's valued at now. That some industries are moving so fast they can't be captured by numbers. The technology sector in early stage companies, and I know by the time you get down to VCs, they can be highly eccentric in the way they invest. I mean, Masayoshi's son at SoftBank said he invested in Jack Ma at Alibaba because he liked his eyes. He said he had incredible eyes. Now, I'm gonna hope there was more to it than that, but it was an early stage company. There wasn't a huge amount to go on. So, Aaron, how much of your job is instinct and being ahead of the numbers and looking at trends, as Scott says? Or how much is it being able to justify with cold-blooded rationality and logic what you're doing?
Yes, I think there is a quantitative and a qualitative piece that every investor has to take a look at. On the quantitative side, Scott is correct. We really have to be able to pull all the information on any particular company, be able to quantify that, and put it under your investment framework. For example, our investment framework focuses on companies with high quality, with high profitability, and at an attractive valuation. Mm-hmm. So that's our broad framework. But under that framework, we have to look across each strategy and see what makes sense. And that's really where the sell-side research can help us to bring the information to bear. But at the same time, we also have to apply the fundamental analysis over that. Is there something that I'm missing that's just not reflected in the numbers? It might simply be a conversation with the management team that might tell me something different than what I'm just seeing on the sell-side research. So there is a qualitative factor that comes, and that comes with experience over time of spending the time that you need to do in each sector. And that's really where that can make a difference in your investment decisions, because as much as this is a numbers game, you really are still investing in people, and the people here is the management that represent the company. And so to me, that's equally important, if not more, when you look at when you're analyzing a company as part of your investment decision. So that makes a big difference. So it's really a combination of both quantitative and qualitative analysis and bringing it together to make it happen. And I think that's where the AI piece can come into play. And of course, we can talk more about that.
Yeah, just before we move on, we've got a nice question from audience. If people do have questions, you can type it into the chat box if you're watching on Zoom. From Ross Henson asks, are there risks in relying too heavily on consensus forecasts? Again, Aaron, there's something to be said for being a contrarian in life, isn't there?
Yes, I think most of the time when buy side looks at consensus, for example, I look at consensus as just as a signal, if you will, as Scott said, to where we believe the market is focused on. For example, if I have a company that's reporting a consensus from 15 analysts, and all the 15 analysts have the same number, That might be a great company, but that is not a company that I'm most interested in investing, because the market has already figured out what the actual value of the company is. Or where I'm more focused on is when we have consensus analysis, but that has a wide variance within consensus. To me, then there is an opportunity there, because the market is not agreeing on what the actual value of the company is. So that, to me, is more important. So yes, consensus is simply a signal that gives you direction of where the market believes the company is, and then you have to make your own independent determination on the value of the company. It's, in many cases, some consensus could be right, or as we know, on a regular basis, we find consensus is wrong, and we see that in every quarter.
All right. I don't touch on AI. Again, a question from the audience is just how AI is being used. I mean, there's sort of generative AI for making reports. There's Gen AI for analyzing data sets, for analyzing verbal statements, quarterly earnings reports. Scott, how are people using AI?
Can I just talk a little bit about the consensus thing, and we come back to the
AI? Yeah, love to. Yeah, it's such a good subject. Yep.
Yeah, well, I was just having been. I mean, I was director of research for IBIS, one of the companies that sort of started consensus estimates a number of years ago, and I've been involved in the industry. And Visible Alpha is known for estimates and creating consensus. And despite all that, I've been meaning for some time to run a campaign. I don't know if we kind of did a little bit. We didn't really do it big. I always want to do a campaign. Consensus is a lie. Because to Arun's point, if consensus, the word consensus, by the way, I was not at IBIS when the name was first originated. Consensus implies agreement, right? And the beauty of the markets is that it's all about disagreement. If everyone agreed, there wouldn't be a market. We wouldn't need it, because everyone would agree on equity prices, and everyone would just get the same return. It's the fact that we disagree is what makes a market. And what the consensus is, despite its name, is a conglomeration of different opinions. And we call the consensus simply the mean of this diffuse set of numbers. We also have other numbers, the high, the low, the standard deviation, and other numbers that give you a bigger flavor of it. But the consensus, this fixation everyone has on the number, is somewhat misplaced. And so when you have companies reporting earnings and they say, oh, they missed consensus by a penny, they beat consensus, what you often find is like the range of estimates is all over the place. And yes, the consensus was here and they were here, but there were some analysts who may have been way up here and some analysts were way down there. They didn't surprise the market. They were higher or lower than the mean of a number. Now, as you get closer and closer to the company reporting, more and more information becomes available. The companies might give out some stuff. By the time you get to the company reporting, that number might be relatively close, right? But over time, the spread of forecasts is very wide. And so when people talk about the consensus and relying on the consensus, there is a danger to relying on that mean as though there was some magic to it. And it's simply the average of all the analysts. And so it's important to understand the spread and to know that it's a fallible number. It's based on what the market believes. So it is very, very valuable because it tells you what at the moment the market believes as a single number to represent this view. It's the average of those people. That is an extremely valuable thing to understand. It provides a backdrop to your own and to others' views. And so when you're talking to an analyst, you're talking to an investor, what's your view on it? Knowing what that is in relation to the consensus, particularly if you know the range, is extremely valuable. But to the questioner, no, you should be skeptical. You should be thinking about that. It's one data point. It's an important data point. And if you in the absence of any other information, it's probably your best guess at what the future is going to hold. But there's a lot more. There's a lot more going on.
Now, Aaron, perhaps you could tackle the question of AI. Sure. There's so many angles I can think of, including the idea that brokers are going to start to rely on AI to generate their reports for them, with all the loose citations and glitches that may introduce. But just tell us, how are you using AI at American Century, and how do you think it can best be used?
I think AI, I would say, is in still early stage when it comes to the actual information on how it can be used as a tool. It's a very powerful tool, as we all have learned over the last year. And it's being used at various levels, I would say, both on the sell side and on the buy side. Yes, at American Century, we are testing some tools that look interesting from a buy side perspective. And I would say it's still very early stages. I would call it Chat GPT 101, if you can use that term. And the key but the potential and the opportunity is great, because, as I said earlier, there is potentially 3,000 data points that is coming at you within a short period of time or during earnings season, even within a span of 24 hours to 48 hours. So you have to rely on information that comes through that whatever data point you're using to analyze the information. So that's where an AI tool can go, for example, and look at 20-page earnings transcript, and I can ask the AI tool to give me the 3 or 4 message points that came out of the earnings call last night from Apple or Nvidia or any of the companies. And I should be able to get that information within a span of seconds, instead of me having to go and read the 20-page report, because if 5 companies are reporting, I don't have the luxury of time. So to me, that is where the AI can really come in and make a difference. And we have companies now beginning to do that. But I would say AI is still in early stages, but it's got a great opportunity to improve the productivity and the efficiency, both on the buy side and on the sell side.
I think
Wow,
that
it's good. It says version 1.0. Yeah, Scott, carry on.
So I should say, I think that at least as far as I can tell, I've talked to a lot of firms who are working on AI projects, many of which are still stuck in kind of the early phases. Some are getting further along, but I think there's kind of 2 kind of impediments that I see from AI being well used. One is having the infrastructure to really get the data useful. And that's particularly the structured data that people have in their systems. Because the AI systems everyone using are very well attuned to textual data, not so well to tabular data, to data in tables. And so getting AI ready as an infrastructure project is something that I think many institutions are still working through. So that's one piece of the problem. And that I think will be worked out over time. And there's plenty of people who can help on that. S&P obviously be one of them, but I won't get into that. There's also, I think, a second issue, which is many of the AI tools have been built on kind of generic training sets. So they've been trained on huge amount of textual sources that are great for general purpose needs. And so they're helping people to solve relatively generic problems. So if you, and that's not to belittle that, if you are using this to help solve problems within your organization, you need to get HR letters written and you need to get different kinds of things done as part of the normal course of business, they can be extremely valuable. I'm not going to debate that. When it comes to the financial markets specifically, however, I found very few of those tools yet have been tuned to the needs of the investment professional. And so they can give you kind of generic solutions, but when it comes to the actual day-to-day workflows of portfolio managers or analysts or bankers, whoever it might be, those tools still have quite a while to go to solve.
Yes, I agree with Scott. Yeah, I definitely agree with Scott on that. We are in the middle of working with a large data provider, I won't give you the name, on literally testing their AI module and giving them real-time feedback on what is working and what is not working. And this is a fairly large provider with a lot of talent and skill, but at the end of the day, you still have to teach them or train the AI module, if you will, to really provide us very specific information, because it's dealing with a very large amount of data, and the AI module is not at a place where it can decipher what is important to an investor versus what is not important to an investor, because that makes all the difference in the decision-making process.
Wow. That actually surprises me that you say that, because the applications are so wide. The power of, I'm a huge fan of ChatGPT, just as even a supplement to using Google, just finding out everyday things. I find it just so powerful. But your needs are very, very specialist. But I can assume it's got the next 6 months, maybe that's going to start to change. That the pace of change is so fast that
things
from
are
one to the next.
Yes, yeah, things are going very, very, very quickly, and I think you'll see definitely movement in that area. But it's not something that's as simple as sometimes it would appear. These things actually take a lot of effort. I think some of the new technologies that are coming out, such as the new Strawberry, which are focused more on logic, and not simply, they're better at math. They're better at solving logical, structured problems. I think will help the AI from a technological standpoint. If you combine that together with training and sources which are more finance driven, and you bring some of those technologies together, you're going to see a lot of advancement over the coming months and quarters and years.
I'm so
I think,
nosy.
yes. One other point I would add to what Scott said, and I think he made that point earlier, the infrastructure is really the key. And you have to have, the firms need to have an infrastructure to really be able to handle the amount of data that's coming through the AI module. And we find even the large sell-side firms right now, there is a disconnect, I can tell you, between what AI can produce from the sell side, because they have to go through a lot of bureaucracy, and they are somewhat designed for the legacy structure, and they don't have the open architecture, if you will, to provide the solution through an AI module at the present time. It's something that actually we are dealing with as we speak right now.
Well, it's a great one. So just my final question. I think we're reaching the end of the session, which is just the future of research. I mean, Aaron, as Scott said, we've moved from paper piles that people had to wade through to PDFs to now really information-rich, technology-based reports. What is the future going to be? 5, 10 years? What is this broker research going to look like? Is it going to be sort of interactive data, real-time data, supplemented with built-in AI modules? Let's be creative here. What's the next stage of broker research?
Well, I can tell you one thing. I can't tell you exactly what the research is going to look like, but I can tell you there's going to be a lot less sell-side firms 10 years from now than they are today. There is clearly going to be a consolidation in the industry, and we are seeing it as we speak. The ones that can adapt quickly to the change that's happening with the technology platform, as Scott pointed out, that is going to be very critical for the success, because you're going to see the ones that can adapt and provide solutions through the new technologies such as AI are going to be the ones that are going to be the winners, and the ones with the legacy platforms that don't transform or change with time and technology, because it's moving very rapidly in front of our eyes, and that is going to be a challenge, and they're going to be left behind.
Wow. And yeah, Scott, what's the future of broker research in 5 years, 10 years? What's it going to look like?
Well, I mean, it's going to change a lot, and it's also going to be very similar. I think at the end of the day, the value of the broker research comes from the minds of the analyst. And so we're not going to replace someone picking up the phone. Maybe it's not going to be a phone. There's a video call. Maybe eventually it's a mind-to-mind communication. I don't know, but you're still going to want to find out, what does the analyst believe? Now, how does the analyst's insights get transferred more efficiently into the workflow of the investor? That's what's going to change. And so visible alpha is one way of sort of taking that data and turning it into, taking that information, turning it into numbers and making the numbers more useful. I think AI is also going to be playing a part in that. I think componentization of those views and breaking it down, making it more useful in people's workflows. At the end of the day, it will change, but it's still going to be ultimately a people business.
Wow, thank you. Okay, guys, we've covered a lot of ground. It's been a crash course for me, and I have a lot of sympathy for retail investors, individuals who have a punt on the market, trying to compete with investment professionals, able to absorb and digest so much analysis and information. But but maybe as Aaron said, there's still a place for intuition and people being ahead of the market, and for contrarian thinkers. But yeah, guys, thank you so much for your expertise. It's hugely appreciated. To our viewers, thank you for joining us.